Hey everybody, Sean from Invest to Live. So we're kicking off a new series this week that I think is going to be moderately valuable here. I like to take Sundays and Sunday evenings to think about the week ahead, what kind of events I should be focused on. I like to understand the impact those events are going to have in my portfolio and the decisions I might be making, the kinds of trades I'm thinking about doing. And if nothing else, also just to make sure I have a good hand or a solid hold on what kind of risks might be out there or what kind of opportunities to consider. This won't always necessarily be a long video. This could be rather quick, actually, depending on what is going on globally, what I want to talk about here, and what seems important to me as far as how I see things. As always, if there's topics you want to learn more about, if you think there's things I'm missing, could be about events that are happening at the company level, who has dividends coming up, could just be a more global perspective of what's happening overseas before it hits us as well. So, if you haven't already, please consider subscribing. We'd really, really appreciate that. And this is episode 1 of what I hope will be an ongoing series for Sunday night preparation for the week ahead. So the first thing I want to jump right into, for the sake of having no fluff at all here, is let's talk about China and Iran. We're not talking politics here at all. We're just talking about deals that are happening at a global macro level and what that might mean from a consideration perspective for investors like us who are thinking about it. So first and foremost, China and Iran very recently signed a 25-year deal where China will invest $400 billion into Iran, and in return, Iran will supply a steady stream of oil to China. This is important for a number of reasons. At certainly the highest level, China's demand for oil is continuing to be through the roof as their population and economy and overall macro components continue to grow. The need for oil and consistently getting that oil is extremely important. This only boosters China's strength in the global economy. This boosters their ability to continue to be a powerhouse in the manufacturing space, as well as that shift into more of that service-focused, technology-focused businesses they're heavily pushing on now. For Iran, this is obviously extremely important as well, because what this does is it reduces their reliance on other partners globally who have things like sanctions or other issues ongoing with the country. So what this does is it gives Iran the opportunity to have a long-term partner with very deep pockets, with a known $400 billion that can be used for things like general investments, infrastructure, growth of the economy. Frankly, really, there's a lot of things they could probably do that we're not going to even talk about or know about, to be perfectly honest here. The reason why I think this is particularly important is if you are primarily an investor in the US in dollars, having such a major deal signed overseas and with some serious partners does have implications on what happens over here. This only emboldens Iran from the perspective of a global scale. So this means more sort of political infighting. And as I always say, I'm not here to talk about politics, but it's important to know that risk on our portfolios, because global economic events, good, bad, ugly, and everything in between, do affect our portfolios. They affect the futures of our markets. They affect our trade partners and how we go to market in general. So at times when you see deals like this happen, many times you see other local and regional deals start to pop up like this as well. And we want to make sure that from the US's perspective, from an investor's perspective, that we have strength in multiple regions. We have predictability in our underlying markets, everything from commodities to the S&P 500 and wherever you want to think about. So that's sort of the first thing as we're going into the week is we know that there is going to be ongoing demand for oil from China. They're going to solve some of that with this very large, very significant deal with Iran. And we also know that Iran is going to be emboldened because they now have a long-term strategic partner within the region who's also going to provide them much needed financial resources. So the next big thing I want to talk about for the week is, excuse me, very quick point, but here in the US, we're continuing to see COVID cases jump in New York. Again, very important thing to think about from an investment perspective. New York being one of the, if not the largest centers for office buildings globally, still having cases ongoing, still seeing uptrend in cases, still seeing that happening over time. What this means is that many of these offices and people are still not going to be able to return to work in New York. There's no clear idea of what is working, it would seem. And what this means is a continued inability to return people to the workforce, open up new jobs, potentially get people back on a regular schedule, get some normalcy in there. The reason this is important to understand is it starts at the very top. We need these folks to be opening up and putting butts in chairs. We need to have rents coming in for these office holdings. These office holdings make up a core of the underlying REITs that sit in many of our portfolios, our 401ks, many pension plans as well. This is bigger than it sounds. It's not just a question of well, New York's cases jumped. It's no big deal. They'll get a vaccine. Everything's going to be fine. Sure. Long term, I have no doubt that that is the case. But the fact that we're still seeing cases jumping right now with all the vaccine efforts that are going on in the US, I do consistently come back and think from a hedging perspective, how exposed am I if this continues for 3 months, 6 months, 9 months? These offices still don't have people in them. They're still not being leased. We still don't know when they're going to be. And then, sort of related to this, we just hear over the weekend, or I did anyways, that WeWork is going to go public in a SPAC for $9 billion. For anyone who's been following that company for a long time, I have. We know that at one point the valuation was north of $40 billion. Obviously, with much internal misalignment and many issues streaming from the bottom to the top, with the pandemic only made all of that so much worse. To think that in a market like New York, for example, where they're still seeing people not returning, they're still seeing issues with rent collections, they're still seeing pressure on that real estate sector. I just don't know that I necessarily understand its scale, the value of the $9 billion that WeWork model right now. I'm not saying not to go in on this. I'm not saying it's not interesting. I'm not saying there's not value there. I'm just saying the overall risk in the real estate market, specifically tied to major cities and specifically to New York City, based on this new information, that perhaps a $9 billion valuation for WeWork via a SPAC is one I would be very cautious about. And I would urge a lot of retail traders to make sure you really understand what you're getting into there. You really take a look at the S1 and understand what's in it. Because if you recall, when they filed for that $40 billion IPO a couple of years back, or maybe even a year and a half or two ago, it wasn't until people got their arms around that S1. Thanks, Income Stock Investing. Appreciate that. Yeah, real big news was just signed actually recently. The piece with WeWork that's sort of really scary to me is we as investors didn't realize just how crazy things were inside of there until those S1s were released. So make sure if you're thinking about putting money into this SPAC, you are reading the documents, you're seeing the investor presentations, you're doing a lot of due diligence, because that's really all I'm ever trying to deploy here is due diligence and hedging for risk. If there's anything you ever get from listening to me speak, it's due diligence and looking at risk. Risk can be managed a number of ways. Due diligence can be done a number of ways. One quick update as we're going into the week. Again, I had put out a video, which now seems like quite a while ago, on the Suez Canal being stuck. This was breaking news when I reported it here, but now here we are several days later, and the Suez Canal is still blocked. This is absolutely completely wild to think that this is happening. The last report I saw were some companies, I think Caterpillar is one of the ones named, are actually thinking about, can they actually get some helicopters in there and get their materials that they need right now off that ship. They're trying dredging. They're trying to dig up the base. They're trying to push the canal's edges back. To date, still nothing's working. The reason why the Suez Canal matters to everyone here and to anyone who is an investor or has a portfolio is this is a continued elongation of a major problem of materials and goods being shipped across the planet. A lot of ships now have been sitting there for days, excuse me, livestock, all kinds of different goods, base materials, food, agriculture, sitting on ships, not able to go anywhere. Some ships are actually being sent down and around Africa's base, which, is a huge increase in cost. I heard numbers upwards of $500,000 of additional cost, but it could be even more, could be less, not confirmed number on that one. But this is one that we talked about earlier, and I want to just say it one more time here. Suez Canal is still not open. We still don't know when it's going to be open. We still don't even really know what is stuck there that's going to affect our portfolios. So again, black swan events happen all the time. It's very hard to predict them. But this is a good reason to learn about hedging techniques in general. Two other things I want to talk about tonight, and I'll leave it pretty short. The big one is we're seeing the futures dip. So this is just an important thing. If you don't look at futures on Sundays or Sunday nights, I think it's important you just take a moment, could be 30 seconds, just type in S&P futures, NASDAQ futures, whatever you might want to look at, just to give you a quick feel after the Asian markets open to understand what kind of directionality or what kind of trend are we seeing for the next day or the next week ahead. With the futures dipping a bit, for me, that's just something that gives me a little pause, make sure I know what I'm getting into, make sure I know where there's risk in my portfolio. If I have open positions that are a little bit on the risky side or that I don't think I have good things in place to protect myself, I want those to be the first considerations I take on Monday morning. It's not about buying or selling for me. It's about understanding if the futures are indicative of the opening going way down, I want to make sure I've got protection in there. Might grab profits if it makes sense, might buy on the low end to add to my positions, wherever the case may be. Make sure you're thinking about that as well. And the final thing tonight that I really want to get out there is we are seeing a global margin call event happening. With tech stocks getting crashed across the board, a lot of very well-known hedge funds are getting smashed with margin calls. We're seeing with Tiger Global just had this happen. We're seeing it overseas in China quite a bit, where these margin calls, and actually, let me even back up a bit. If you're not familiar with margin is the ability to borrow against your portfolio to buy stocks, options, futures, whatever the case might be, with margin. So essentially borrowed money to add more to your portfolio. The idea typically with margin, and this is not meant to be a complete and thorough baseline. I'm gonna talk to that in a second. Actually, a comment from Income Stock Investing again, who thank you as always for watching. I want to address that because I think that's really important here. On the margin piece, one of the big things we think about is margin's a great way to add to our portfolio. It helps to lever up the returns, but it levers up the losses too. So many hedge funds were not in a position, or they were over leveraged, where now when they got hit and had those margin calls, what's going to have to happen is if they don't have the cash, which it's likely they don't, they're now going to have to start selling positions heavy. And oftentimes what will happen is very large hedge funds, institutional traders will sell large blocks of stock, think thousands, hundreds of thousands of shares in private markets. Could be dark pools where they don't want it to leak out to the general popular market that they're selling, because it'll cause a panic in the market, will cause the prices to drop. Then they're not going to get good pricing on what they're selling. The reason this matters to us retail investors who are trying to manage our portfolios and do the right things is we're going to be the last to know that these trades happened. And by the time they do, the prices are typically going to be going against us. So again, this goes back to the consistent theme of this channel. Know the risks, be prepared to hedge against it, know how you can lose money at any given time when things like this happen. I will absolutely go deeper on another video into like margin, how this works, how you lever, and what a dark pool is and why dark pools are leveraged for hedge funds. I won't do it tonight on this live one, but I think these are the kind of things that if once you start to grow your portfolio to a reasonable size, you're getting bigger over time, you're thinking about even financial independence or early retirement, because I hear that so much on YouTube. It's really important to understand that there can be major events that you aren't thinking about that happen all the time, but you're just not exposed to that institutional side of the market. So my goal is just to make sure you're getting some of that information in videos like this and other videos as well. I was going to call it a night after that, but actually I want to call out a great channel, by the way, Income Stock Investing. Just asked, or just made a statement that his plan is to spread money out amongst the blue chips because everything seems really expensive. You know, I think that's a really, really good call out, because this is a time of value versus growth, at least for me. And that's how I'm looking at it. I think we've been in a time of growth where we're looking at tech. We're looking at where we can see huge gains in the market. In fact, we've seen them, frankly. But now with margin calls coming in, Suez is blocked. We're seeing New York City COVID cases jumping. China and Iran are signing long-term, large-scale agreements. It just sort of keeps driving that perspective of like global macro events, big things are happening. It's hard to predict what they're going to mean for us long-term. So, you know, putting your money into things like blue chip stocks, collecting the dividends, knowing that there's some ability to at least maintain that price or have some protection there is a very smart move for most, if not almost all, retail investors who are trying to build a portfolio for the long term in a safe way, because they're building towards long-term goals and wealth. I think if you're a trader, what I would just urge is a little bit more caution than normal. One thing of having been in the space for 20 years, I can remember getting hit with like the dot-com bubble, and then we get hit with 9/11, and then we're hit in 2008, and then we're hit again recently. You know, even the best traders with the best strategies have to understand that those strategies only work based on the current economic conditions and global macro factors. If you're not rethinking your trading strategy, and you're not rethinking the way you built your algorithm, if you're doing any kind of automated trading, these are the moments that are affected by that. Suez Canal, black swan event. China, Iran, 400 billion for 25 years of oil. That's kind of a black swan event if I'm a trader. Just be aware of that, right? All this combined with the pandemic that's still ongoing. So let me end there. It was longer than I meant it to be, but this is sort of the first episode of what I'm going to start trying to do on Sunday nights. If you watch us and you're not subscribed, I would really appreciate the sub. We're trying to grow here. Other than that, I hope you have a great week. Good luck trading, collecting your dividends, and just thinking about investing in general. So otherwise, thanks so much, and thanks for watching. There's always the awkward moment at the end when I can't find the stream button. So we'll see you later. Thanks so much.